Today in the grain market, soybeans did slip. There has been some profit taking, and export sales have slowed down. And if the WASI report comes in next week a little bit bearish, I think it's going to add some more pressure to the market to really move into a more sizable correction. Long-term fundamentals still look like it points higher, but we've got to just continue to watch. Option open interest is still on the rise, and that just lets you know that traders are participating in that risk management tool because of the nature of the market over these last couple of days. Corn also was down. The choppy trade does persist. The current issues with supplies, as well as the expectation of demand, is kind of in the market right now. Technically, futures are overbought and vulnerable to a more sizable correction, as we stated earlier, and it seems like that only changes to the supply and the demand will give a little bit better direction to the market. Now, mostly we have been in a channel for corn between the 520 and 560 mark. Now, we extended those numbers just a little bit, but that's really been the 40 cents that we've been in for a while, since really the middle of January. Now, yesterday's jump up of December futures did spark a little bit of an increase in the at the money straddle for the options market. So that just tells you there's an awful lot of interest, and certainly there's going to be a lot more participation going forward. So right now we're at the 24 or 29.4% volatility, which is really the highest ever for December from this time. So that just kind of tells you that it's piqued everyone's interest in these markets, and I expect that we're going to have a lot more volatility ahead, certainly in the options, and that just really means more participation. Now, wheat was lower today. Futures do remain kind of range bound and will probably stay that way really until the March USDA report next week. Now, we're in a channel as well between 640 and 670. Weather issues do remain remain dry, and I think that there is going to be something that we've got to be watching. Of course, we keep waiting to see if we can find out what the damage is for the winter kill. We just don't have that information as of yet. Now, expansion of the option open interest does indicate really more participation as well. And right now, all eyes are really going to be focused on next week's March USDA report, and I expect that the choppy trade will continue until then, unless we start to trade, unless other headlines come into play. So right now, we've been a little bit of up and down as we start March.